it's a pure casino sometimes. Like things are just completely random. So, and bots are trading left and right and humans, and it's just wild. But that's why we have this big window, and we are not necessarily directional, because anything can happen. And with this window, this is basically usually often the best shot we have. It's always nice, especially when you have these slow products, grandpa products. It's always just wait for the next day, let the dust settle. And worst case scenario, let's just say for TLT, right? Worst case scenario, it's going to go all the way up to whatever. Fine, then we are accepting a loss of 10% or maybe 20%. Fine, but theta is also on our side. We'll see. I'm putting them on a little bit more defensive, meaning the risk return is 1 to 2. Win 1, risk 2. It's counterintuitive, but at the end, this is a better trade. We have a larger profitability window, and the probability of us losing more in relation to our trade size is actually less. So this is a more defensive setup, even though one might think that we can lose more, but that's not true. And that's why I also feel a little bit more comfortable to just get in. And if it doesn't work out, we only have 10%, maybe maximum 20% loss. And that's fine. And it's also more difficult the maximum we can make here is 50%, obviously. So we will probably only make 30, 40, but generally we have a wider window. We have a more easy situation. If there's only a 90% heat, there's only a 90% chance that our product will be more than 30% negative from now until we exit. We also don't exit at the end, but we exit early, right? So this is all calculated in. So I like heat when it's 30% or below. I like that. I like when the cover is above 1. I like the win odds 58%. So the win odds, the heats, the cover, they're all kind of like interesting. IV rank is obviously nice. Is the IV decreasing? So that's what we want. It doesn't have to be super high. TLT also wasn't really high, but if it goes down, we're good. So you can test them all, and at some point you will know these assets, and then you don't have to price them anymore. This is too similar to Korea, which it is.
Are you in
Taiwan
Korea?
Semiconductor is 15. Yeah, I'm in Korea. I'm in this one here.
Why?
And I don't necessarily want to be in the same trade twice. It's very much correlated. EEM just has Taiwan Semiconductor in 50%. But I thought maybe today, right? Let's price this real quick. EEM. So this was yesterday. So Korea was kind of like falling yesterday. So was emerging markets. So do I want to go in while it's falling and I'm already in it? I was like, okay, let's just wait another day. Let's go into something completely different, like a different industry, Löw, and it's an earnings play. It's not. It's a different style and different asset, different for diversification effects. Most people have very bullish portfolio, which is bad. So you kind of do want to change this into more neutral, delta neutral portfolios, at least a little bit. And this list might help, which would be a natural hedge. So you don't have to actively hedge with an expensive hedge, but you can actually short names which are actually going down, even in a market which goes up. So this would be a win-win. First, your portfolio becomes more delta neutral. Second of all, you're making additional money with shorts.